Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media that's related to wealth building, commodities, and/or financial topics. I'll sprinkle in my financial opinion as we go through it. And if you want to follow me, I'm at Finding_Finance. If you want to join our community, it's finding-value.com. We still have a coupon code Mayday that is active. You can see in the description link what those discounts are. And I just posted our question and answer session video for the weekend. So if you need help with anything commodity related, precious metals related, individual companies, sectors, stuff like that, you can follow me and see what I'm doing. So here's Dave. He says, question for those who sold Encore Energy a few weeks ago after drawing some lines. Have you bought back in? Well, I never sold any of my uranium holdings, so I don't have to do anything. Last bull market, one of the lessons that I had learned is do not trade the short term in a bull market. The pullbacks can be brief, they can fake you out. And if we're in the big bull market, why the heck am I trying to time the short term market anyway? It's a psychological game, guys. And what I've found from my experience is to not trade in and out of equities or stocks or commodities, whatever it is. If you get a good buy point at a very cheap price, buy it and then hold on for dear life and ride it until the bull market is over. And a lot of people will say, well, how do you know it's over? Well, that's why I've got the three pillars: the ratios, market conditions, and technical analysis. And also other cycles that I monitor, which help with the market conditions. So I think everything is still ripe and still game. And even if we get a recession, it doesn't impact the longer term. It doesn't impact it, guys. So even if we get a slowdown in stocks or technology, which is probably a likely scenario, we should see precious metals and commodities outperform like the 1970s. So I don't have to do anything. I don't have to even think about it. I'm staying in it, which saves my brain cells for new potential opportunities and entry points where I'm focusing my efforts on. Not trying to figure out if I should buy or sell something and get afraid and FOMO back in. That's just not what I do. So Isabel Net says performance. Is it time for U.S. equity investors to favor regional banks in their portfolio? So this is regional banks, the contrarian hard landing trade. Regional banks KRE versus large banks BKX, and we can see that we're at the lowest since November of 2009. Perhaps the yield curve and where rates are located, maybe we're putting in a potential bottom for KRE, and maybe we are putting in a short-term top in interest rates. I don't know, but maybe interest rates will go down at some point. Maybe they won't. That's what a lot of people are speculating on. What I know is when things get cheap, that's generally when I accumulate and then I hold on till they get I'll say a lot more expensive. Maybe not overvalued, but a lot more expensive. But regional banks could be an opportunity. And if we're going into a bull market and are in a bull market for real estate, maybe if interest rates pull back a little bit, maybe KRE is going to go on up. We've got peak assets here. He says, or she says, for all the gold bulls, China activity going up in a big way. Oh my God, look at this guy. Chinese gold trading activity explodes to the upside. Absolutely ridiculous in terms of trading volumes coming out of China. Markets Mayhem says probably nothing. So the top 1% of US earners now have more wealth than the middle class. Share of all household wealth by year from 1993 to 2023. And we can see that the top 1% crushing it compared to the middle class that is declining. The name of the game is to acquire assets, and the top 1% have a lot of assets. And under inflationary periods or increasing inflationary periods, the wealth gets transferred to those that hold the assets. They're kind of AKA inflation protected. So the name of the game is to acquire assets and hold on. Hold on, hodl. If precious metals even get near these prices, it will be a bonanza, free cash flow for producers. Companies will print 50 to 60% of their market caps in free cash flow this year if these trends continue. Got Metals, and David Hunter made a comment. It says metals and miners are poised to move out of their consolidation of the past few weeks and make another nice run to the upside. My pre-bust target remains at gold 3,000, silver at 60, GDX at 65, GDXJ at 100, SIL at 75, and SILJ at 35. Next several months should be a rewarding time for those invested in precious metals. I do think that things do look good for precious metals because of where we're at with the yield curve. And if unemployment does go up, that's generally when precious metals do incredibly well. Think of it as a slowdown. Adam Smith says, help me settle a debate. What's the optimal size house for a family of 4? My vote is 3,200 square feet. Is that high or low? Well, I don't think there's such a thing as optimal. For 4 people, I would say a good size is like 2,000 to 2,500 square feet would be a pretty good size. 3,200 is definitely on the larger end. And the house I live in, we've got more than 4 people. I think it's plenty big. I have no problems, and mine's a little bit bigger than 3,200, and we have 6 people living here right now. So that's 6 with 30, probably 30, I don't know, 3,700 is probably what mine is. And I think that's plenty big. So I don't know. I would say 2,000 to 2,500 if you've got 4 people. I think that's plenty big. Captain Forsyth says crude market shrugs off ceasefire news because at current price there was no geopolitical premium. You got that right. I don't think there's any premium in this price for crude oil. I think there's zero. I don't even think the demand supply out in the future is priced in, to be honest. So Game of Trades, it says this is what wealth destruction in a safe asset looks like. U.S. government bonds have broken below a 40-year uptrend and are now trading around 2013 levels. That's a lost decade for these bond holders. So this is from 1982 was the bottom of the stock market. In the bond market, we had a double bounce here, double bottom, from about 80, 81 to 83, 84. And we got that double bottom and we've gone up the entire time. That was your declining interest rate environment where bond prices went up the entire time. You can see a shoulder, head, shoulder topping pattern that is an end of trend move, and we are heading lower in bond prices. How low are we going to go? It's probably going to go quite a bit further to the downside. We are at support though, and there's a lot of support in the region that we're at. Just an FYI. Eric Nuttall says, while $80 WTI remains our base case for 24-25 in investment selection, there is increased talk of $90 plus this summer. Why? Even assuming demand growth well below OPEC's forecast, inventory draws beginning in June look to take global inventories, despite having absorbed 268 million net barrels from the U.S. Strategic Political Reserve to record lows. We expect OPEC and Saudi to be able to begin to return curtailed volumes into or onto the market in the second half. And oddly, more supply could be bullish, or at least neutral, to price as the market focuses will begin to shift to falling OPEC spare capacity combined with meaningfully lower U.S. production growth in 24 and going forward. All the while, demand continues to hit record highs. This is the forecast for total global held in inventory, oil, just jumping off a cliff soon. He says starting in June. And that's where we could get our big move in oil prices. Going on down to BHP and Anglo American, the combined entity would emerge as the world's largest copper producer, as evidenced by their aggregate 2023 full year production figures. So if they were to merge, they would be the big kahuna in copper, in terms of copper production. Second is Freeport. Third is Codelco. Fourth is Glencore. We've got a Chinese mining company. Southern Copper is up there, and so on. So lots of real big players shifting around here. And I know some people, they're going after Anglo American for their assets right now. Appalachia production, we are declining in Appalachia for 2024. You can see how much lower we are than 2023. So we are pulling back on production. That's for nat gas in just Appalachia. Game of trades, this is the longest yield curve inversion since 1929, but the recession is still a no-show. Is this time different? And I just want to focus on this first one here. This is the inversions and drawdowns, the number of inversion days and its corresponding market drawdown. So he's got at least a correlation with the number of inverted days and the potential drawdown that the markets have seen behind that yield curve uninversion. So I think we're at 500 something days over here. And is this going to lead to a 50, 60, 70, 80% correction when it does correct? I don't know. And maybe we go all the way out to the right-hand side out here, or maybe we go another year or two inverted. Tough to say. But I do think that the overall markets will go down, like NASDAQ and maybe even the S&P 500, but I think commodities will go up during that time frame, but it depends on how fast it sells off. If you get a real sharp sell-off, you're going to get margin calls, and those margin calls are not going to be good for the overall space of everything. Everything will get sold to raise cash. Alex Justin says U.S. M2 money supply is growing at 0.84% year over year, back to expansion. So we saw this big drawdown in M2 money supply going to negative, and now we're coming back into positive territory. The reverse repo did supplement, I think, the money supply when this was negative. Patrick Karam says gold has opened the pathway. It is now up to gold and silver miners to follow suit. So gold versus CPI is breaking to the upside here, potentially breaking to new all-time highs, which is a possibility. And then we've got the silver junior miners are at a wall of resistance. We're trying to break through it and follow gold versus CPI higher. Batman Capital says 50% returns consistently over years is almost impossible, even on a small portfolio. If you make 50%, it means you're taking a lot of risks and you're bound to lose a lot, at least 2 years out of 5. Don't hate me for this, but I do think making 10 to 20% return a year consistently in the European smaller cap universe is possible. Some of those are so oversold and there's zero liquidity, but you need to be stubborn and hold for several years, possibly. And that's what someone said, saying potentially that Buffett could get a 50% internal rate of return in small caps if he could, and not be stuck with these large companies is what he's responding to. I think you can get really good returns for this 10-year period in commodities. And I'm talking very good returns, maybe even as good as 50%, depending on the companies you select and how long you can hold. It will not be an easy ride. And it won't be a steady return. It's going to be lumpy, which makes it harder. But when these things go, they're going to return a lot of money. Now, that doesn't mean that you have to take on all the risk in the world. you can manage your risk by smaller portfolio position sizes in the riskier stuff, and then you can go after what is deemed very good. Uh, if you buy with good risk reward and you control your buying entry points, that is how you get the return. You have to buy when it's really low and it's cheap, and then it inflects and goes to a much higher level. But stock selection is going to have and how you position size the portfolio is going to have a big impact on this. And I'm not saying that I know all of the best companies, but I know a lot of really good risk reward companies right now, a lot across various sectors. It says if you bought an EV to save money, looks like you just might have been lied to. So this is the cost per 1,000 miles that they ran the numbers on. It says hybrids cost about $3,000 per every 1,000 miles. Gas cars are about 31.23. Plug-in hybrids are 43.51, and EVs are the highest at $5,108 per 1,000 miles. The car that I purchased, brand new, is very cheap. I'm under $1,000 per 1,000 miles on the car that I currently own. A Honda Civic is also probably pretty close to that, maybe $1,000 per 10,000 miles. And yeah, I put some money into my car, but all of the parts are just stupid cheap. I own a Chevrolet Aveo. It's just a small, cheap car. I've got about 200,000 miles on it. I bought it new for like $7,500. It had some light hail damage when I got it. Not it really you couldn't tell the damage. So I mean that thing's been just an absolute crusher for these types of dollars per mile. The cruncher, he says Biden pledged not to raise taxes on any household with an annual income under 400,000 bucks. I went through the 256-page tax proposal to analyze whether that's true. Currently, individuals with a modified adjusted gross income of 200,000 bucks, which is single, or 250 joint, are subject to a 3.8% tax on net investment income, interest, dividends, rents, annuities, disposition of property. The proposal would actually expand the definition of investment income to include all pass-through business income, like S corporation income, subjecting them to a 3.8% tax. Many S corps are small business owners who will need to pay significantly more in taxes. Long-term capital gains are taxed at graduated rates based on the taxable income, with 20% being the highest rate. The proposal would make long-term capital gains for taxpayers with income of more than 1 million to be taxed at ordinary rates, with 37% being the highest rate. You might say it's only for 1 million income. But think about this. A family bought a duplex in California in 1990s. They've they've never made 150,000. Now the property might be worth significantly more. The new proposal would make them pay more than 15% plus in additional taxes. So currently, owners of appreciated property can defer gain on an exchange of the property for real property, like a like kind of exchange. New proposal would allow deferral of up to 500,000. And I know mom and pop investors making significantly less than 200,000 who own appreciated properties. They would pay a lot more in taxes because of the new proposal. In addition, there are a few proposals that would indirectly tax people regardless of income. For example, the new tax proposal would increase the corporate income tax from 21 to 28%. Why does this matter? Raising the rate on corporate income tax rate would lower wages and increase costs. Raising the corporate income tax rate would force companies to take headquarters and earnings overseas. While many of the proposed changes do impact people making 400,000 or more, the backdoor Roth and mega backdoor change, NIIT and additional Medicare tax increases. People making less than 400,000 will still face increased taxes, both directly and indirectly. Okay, so that's what he's got with the proposed tax changes that Biden is trying to put through. It will increase taxes for everyone. Here, the bull cycle in emerging markets is not a question of if, but only of when And those are the kind of investments you should focus on. We are convinced that the emerging equity markets will outperform the industrialized countries over the next 10 years. The ratio between the MSCI emerging market and MSCI world is back to the level of the 2000s. Are you already positioned? So we're back to the 2000s doing a potential bottom here. Could it be like a double bottom on the ratio? That I would say yes, most likely. And we are at a very low level for emerging markets versus developed world way down here. Huge opportunities out there, guys. Huge opportunities. Peter says Chinese home prices are dropping faster than in Japan after its own bubble burst. And that's, in my opinion, due to credit destruction from the demographic that just dropped off a cliff. That is a bubble. This is a bubble. Your demographic is what drives this. Right now, we are not in a bubble in America because we don't have the homes to satisfy the demand that we've got. We are in a massive shortage. A bubble is when you have a huge surplus. So you could be in a development of a bubble, but you can't be in a bubble if the homes do not exist, in my opinion. They have to change into existence. It says full transparency. We currently have about $500,000 in cash. My intuition tells me to invest it into Bitcoin until I find another worthwhile venture. For those with more knowledge than myself, is this a bad plan? I would not put all of your money in Bitcoin. I would diversify it, number one. Number two, I'm not a huge Bitcoin fan, and we could be in a bubble for NASDAQ stocks, and Bitcoin does correlate very well with that. And maybe Bitcoin does work out and they do a bunch of money printing and Bitcoin accounts for that money printing potentially. That is a possibility. And maybe this person does make a bunch of money. But I personally would not put a large amount of money in one particular asset class. I would diversify it out. Bitcoin and putting it all in Bitcoin is not diversifying. I don't know his circumstance. I don't know if $500,000 is a lot or not. I don't know, but I wouldn't do that. Here's household excess savings. Caution, household have now run out of excess savings. Current levels are worse than 2019. The worst part is that this is happening just as the labor market has started to weaken. This won't end well, and you can see excess savings are now negative. They are dipping into savings. Now, how much savings is in their accounts? I don't know. This is dipping down a little bit, and that is household excess savings as a share of GDP. Yield curve's been okay. We already went over that. Here is small cap stocks are currently trading at their lowest valuations compared to larger companies since the early 2000s and 1970s. It's not coincidental that commodities, emerging markets, value stocks, and small cap equities typically excel during a secular bull market in gold. We are likely experiencing another significant inflection point where small caps are deeply undervalued and positioned for strong performance in the next decade. And yes, emerging markets and small caps all move together and they are all bottoming. I look for confluence of information that aligns with each other. Last time we had a commodity bull market, small outperformed large, and we're back at those same valuations as we were at the beginning of the last bull market. We also see emerging markets are bottoming against the world index. That is the confluence that I look for when investing and making decisions. And that is where I'm going to end it, guys. So I'm going to end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you guys like. We do have a discount going on, May Day. One word, MAYDAY, if you want a discount. And obviously, I release midweek updates on Wednesdays. We do question and answer sessions on the weekends. And that's all I've got. So we'll catch you guys later. This is Finding Value.